This is Eric Muathe with Muathe.com again. Wanted to touch up a little bit on the Muathe Virgin breakouts. I think I left out some points, so I want to just go back and see whether we can revisit the topic again with another introduction. Now, as far as the setup is concerned, there, like we talked about, it being, you get the flat pivot above the 200-day moving average when your 50 days already showing the sign of moving higher. So eventually what you're actually anticipating is this crossover. So between the 50-day moving average moving from here to here and the 200-day moving average eventually turning up, the stock is going to have to move. So you wait for it to move above this highest close above the 200-day moving average. So when the stock trades around here and then finally moves out of that range, you want to buy it then, buy it there. Usually there'll be shakiness because you're buying a stock that has been in trouble, so there's a lot of resistance every time the stock tries to move higher. So it's going to be a shaky breakout, but that's probably a nice time to add on to your position. In any case, it's a good place for a buy and hold strategy. You buy it and you're going to be making some good returns, all things held constant. Now, that was the variation we talked about. Now, and we also talked about the possibility of sometimes if you're really aggressive using the 50-day moving average, because there will be a close around here and you can buy it once the stock trades lower here and moves above that. But that's going to be an aggressive buy because eventually it's going to move above the 200-day and then it's going to stall because it has to settle down above the flat 200-day moving average. Not always, but usually. So that's what we talked about in the main introduction. Now, there are some variations to this, and sometimes what you'll find is that the 50-day, the 200-day moving average sometimes will not be flat. The 200-day might be just trending higher, and what you have is a 50-day moving average that has come down. Sometime it's going to be here, it's going to go flat. So this is already trending higher, giving you an indication of where the market is, the stock is headed longer term. So in this kind of situation, you want to buy a close above this flat 50-day moving average. So it comes and closes there, trades lower for a couple of days, and then moves out of that range. So what that's telling you is that this 50-day moving average wants to move higher. So you buy it then at that point. Okay. Now there's also a variation where the 50-day moving average is actually below the 200-day moving average and it's flat. Again, you want to buy it once it's moving higher, moves above the 50-day, trades lower for a little bit, and then moves out. So what that's telling you is that more than likely now there's the likelihood of this eventually coming over and crossing like that. So in the above case, there's no crossover with the 200-day. In the above case, you're anticipating that this is going to move it to crossover, and you're playing this move from here to here on the 50-day, and that because usually a big move is witnessed at that time because the stock really has to move substantially in order to influence the 50-day moving average. So now that's another variation of that. Now there's also another variation of the same thing where you have a 200. They're all the same things. Basically what you're doing is you're either using a flat 50-day moving average or a flat 200-day moving average. And this can either go higher after it's been flat. It can stay flat for a while longer, but that usually doesn't last, or it can go lower. So either way, you want confirmation that it's gonna go higher. If you're long the stock, you time it to move above that, settle down, and then move. That way, more than likely it's not gonna turn high. And this is usually a longer term move or medium term move because it takes a lot to move the 50-day, but it takes even more price move for the 200-day moving average to turn and actually continue staying higher or lower. So that's pretty much what we are trying to play here. Now, another variation of the same thing is we have a 200-day moving average that was dropping, settles down, and then you have a 50-day moving average that comes, and now it's already turning up. Now sometimes what you're going to observe is that a stock is going to settle down below the flat 200-day or sometimes the flat 50-day. So if it's just below the flat 200-day moving average, that can also be your buy point if it's below, just under the flat 200-day moving average. So once you have a high around a flat 200-day moving average, the stock settles down and breaks out of that. What's this telling you is that this flat 200-day moving average wants to start moving higher. That too can be a buy signal. So that's one of the another variation of the same thing. And now what I'm going to do, I'm going to go through some examples just to tie all this down, repeat the same thing over and over. But remember, there are many variations of the same things, and sometimes, let me spend a moment explaining this, you're going to find that the 200-day moving average is dropping, it's flat, and now it might go down. And this is sometimes how you want to go short a stock, is you have a close there, stock tries to go higher, and then comes back and breaks this, while the 200-day or the 50-day moving average is flat. So once this is broken, what's this telling you is that this moving average that was flat now wants to turn around, and usually that predicts lower prices here. So there's also, you can use it on the reverse, on the inverse. All right, some examples. Now we're looking at the QIDs, and those of you are going to be watching these videos down the road. This is May 2nd on a Friday after the close. Now what the QIDs have done, you see now already we have a downward trending 50-day moving average, and we have, so that's already keying us in on where short-term the indication pressure is downward. We have a flat 200-day moving average. So what I'm thinking is going to happen here, or might happen, is around here we're going to get a close, okay, somewhere around here, and the stock is going to try and move higher. At some point, more than likely, this is going to come back, more than likely, I'm not sure. But when this, if it happens and this comes back and closes below this close that was here and breaks it, what's that telling us is that this is going to start trending lower, and this is going to start trending lower. So eventually they might cross over. So this is actually a sign to short the stock around there. It's telling us that the markets might actually have short-term or medium-term some momentum to the upside, because this is an inverse ETF. Now, I might also want to note that I know I've been watching this, that there is a break on a trend on the RSI that has been broken right here. It held here, here, and here, and we see this blue line was broken on the downside. So that's a negative thing for the stock. So what's that telling us is that more than likely this might also, the 200-day moving average might turn around, and this might be time to short the stock, which might suggest the markets and the Nasdaq and the Qs might be strong when that happens. Next up we have Google. Now Google had again, you see Google is forming this flat 200-day moving average. Now it's already gone down on this close for today, so I think it's gonna meander around here for a while, and then eventually might break out of that. When it breaks out of that, that's going to be a buy point, because that's telling us that the flat 200-day moving average wants to move upwards, and the 50-day is going to follow. Eventually they're going to cross over somewhere around there, and this move is what we want to play, because this can only happen if and only if prices move substantially, taking Google up to the 700 or even 7 or even retest these highs around 740. That has to happen if for this 200-day moving average turns up, and the only way we know that is if we have a move above this prior close, above the flat 200-day moving average. Now notice one thing, earlier we had a flat 50-day and a flat 200-day. Now at that point, you could have used this close here that I've shown in the circle as an entry point, because when that was broken with this move here on this day right there, what that told us is that now the 200-day might move higher from this flat action, and the 50-day moving average could also move higher from that move. And surely enough, that took the stock from around 530 all the way to 740. Just that little information. Flat moving averages moving around can really key you in on substantial moves in a stock. Next up, we have the SRS. These are ultra shorts, the housing real estate complex. Again, we see the 50-day moving average has already turned around. It was flat. You could have used this close here, somewhere around here, or even this one. Once it's broken, it tells you that this wants to turn around, and that's a long-term bearish indication. And then when it was broken there, stocks fallen from 105 all the way to 80 in a month and a half. Again, we see now that's a bearish indication. Now this can always come back and turn around, and this can stay flat and move higher. We don't know. So what we do is we wait. We use closes. So now the stocks, we have a close here, and the stock is going to try and move above that. Now if it comes around again and breaks it with a negative close, then that tells us that even now the 200-day moving average wants to move lower. That's a bearish sign for this ETF. Now on the other hand, let me take that off. If the stock comes around and closes above that, that's telling us that more than likely the 200-day moving average is going to head higher, and that's a medium-term bullish signal. Okay, so that's something you want to watch. You want to watch for confirmation. Right now I don't know what direction it's going to happen, because the 200-day is still flat. And how we know where we can get the next action is on a confirmation, either confirmation on the downside after a close, if it goes higher for a couple of days or weeks and then breaks that on the downside, or if now we have a strong move that closes above this close here, telling us either up or down confirmation is what we want. And whatever direction that takes, we have to respect that and know it's going to be in play for a couple of months, if not a couple of weeks. Next, we have the Qs again. You see what the Qs are doing here is that they are trying to go flat. And again, what I suspect, like in Google's case, is going to happen is we might have another positive close, but at some point we're going to settle down for a couple of days or weeks, probably days, and then we are going to come back again, more than likely, and close above that. And the reason why I'm saying that is because I already have an upward trending 50-day moving average. Now that's the indication, but what could also happen is that you can have a flat 200-day moving average, and this can look like it's trending higher, but this can turn up and go down, and then this can go down. Now that's negative. That tells us longer term we might retest these lows. So right now we don't know. What we are hoping is going to happen right now for me is that we have settling down, and then we break above that on good volume or decent volume, and then what that's telling us is that now this is going to eventually going to cross over, and that predicts higher prices along the way. Now watch, when this was flat here, and then we had a close just below the flat 50-day moving average, when the stock went up and broke that with a close right there, confirming that the 50-day moving average was going to be headed lower. If we had just paid attention to that little action right there and sold or shorted the market, that would have been a nice indication of what happened next, because the Qs moved from 51 all the way to 41, a big move, and the markets were negative at that time. So watching the flat moving averages and where they go next is an indication of short-term direction. Also, now we have the Nikkei. It too had been forming a flat 50-day moving average recently. Use the highest close above the flat 50-day moving average. The moment that is broken, like it did right there, the market's been up very well in the short term. Again, you see when we had a flat 200-day moving average here, this was never confirmed on the upside. So we had a flat 200-day moving average here. This never settled down to move higher. So what that tells us is that there's no confirmation of upside. Again, we have a flat 50-day moving average. Stock tries, index tries to move above that, eventually comes and collapses. Now we use that close below the 50-day. When it's broken on the downside, that's telling us what was flat can turn down. When it's turning down, it's a short-term indication of weakness. And surely enough, the market moved from 16K all the way to under 12K. So just watch the flat 50-day moving average and all that. Now let's take a look at another example. In this example, it's the IYT, the ETF for transportation. Now, it has different levels of a flat 200-day moving average. A flat one there, and a one recently. They are all flat. So now you can, because this hasn't turned higher, there's still room for movement in this ETF. Now, I would suspect that at some point it might again trade lower, and then we can use this highest close above this flat 200 here, this close here. Once that is broken to the upside, that's another indication that shipping stocks are still strong and might continue rallying. Now, so sometimes you can find different levels of a flat 200-day moving average, because it's hard for it to move a lot. So, and then in each instance, like in that instance, you could have used that close there when that was broken to the upside as an entry point, and another highest close there shown in the blue circle. Again, move below that, and then when you move above that, you enter that shown by the green arrow. So every flat 200-day, what we are anticipating here is that eventually we are going to have an upward trending 200-day moving average. Also note, while this was flat here on the 50-day, if you are very aggressive and you don't mind holding through this up and down action before the 200-day turns around, you can use the highest close above the flat 50-day moving average, that close there, for an entry point. So you could have entered the stock during this move here, taking you from just above 85 or thereabouts to about as high as 95 in a month. So not bad, not a bad move, given that that's all you're using. So again, using this, and then again, every time you have a buy point above a flat moving average, that's what I call the flat pivot or the flat buy point, just so that we can all be on the same page. Let's take a look at another another example. Is it GXC China S&P 500 ETF? Again, you see now it has a kind of weird formation, but these two can also work. Again, what's happening here is we have an upward trending 200-day moving average, and the only way this can either go up is if we move above this a little bit, close above that, trend lower, and then break out. So that's going to move this higher. Or this can also go lower. And how we know that is if this stays flat, we use this close around here, and this comes and it's broken to the downside, the stock comes down and breaks that with a strong close, then that's indication that this is turning up. We also need evidence at that time that this is also moving lower. So that's going to mean we're going to cross over down here. If that happens, that means more than likely it's going to take out these lows here and these lows here. All right, so and then notice even here, if you throw your eyes, you'll see a slightly flat 50-day moving average. I've always thought before you get a good move in a stock, you need some rest in the moving average, and you always find that before a strong move, there was always a flat 50-day or a flat 200-day or a flat 10-week moving average before a substantial move. You need rest before any substantial move. It's just like in life. You need a rest before you can be in any strenuous activity. All right, next move. Again, another solar ETF tracking stock. If we go back and look at a move it had in August, you see a flat 50-day moving average here. And so if you use this flat 50-day or this one and take either this close here or this one here, when that was broken to the upside with this move here and here, then we knew that it was no longer going to stay flat, it was going to trend higher. And when that happens, the only way that you can move this 50-day moving average is by a big move. And in this case, that move took the stock from around 46, below 46, all the way to as high as 60 in under a month. Big move. And in this time, the solar stocks were very hot. So it's little stuff like that keys you in on what sectors you should watch. Right now, again, we are watching, there was a flat 200-day moving average there. And this close here, when this was flat, this close here shown by a green circle, when that was broken, that has moved this 200-day moving average, and it's now trending higher, moving the stock from around 45 or thereabouts to around 54 in a couple of weeks. So we still have, this one is trending higher. I'm suspecting or hoping either price moves higher and this continues staying higher, or even this one comes and settles down again before we have another close, another breakout here, taking it higher and keeping this one moving higher. Hopefully that's what happens, because we have an upward trending 250-day moving average. It's not impossible, by the way, for all of this to turn around. So it's something we have to watch. Okay, now let's go back and look at our solar ETS PBW. Again, it's forming a flat 50-day moving average, a flat 200-day moving average. So this one is easy for us to know what's going to happen next when we get confirmation. What we need to do is, if we have a substantial close above that, that's telling us that it's going to turn up, that's going to turn up. Eventually, they're going to cross over. And by doing that, by this crossover, that means that prices are going to move substantially higher. And solar is going to be hot again. So solar is still showing signs of strength, even though it's been weak in the last couple of, on and off in the last couple of days. It's been weak and strong, but you see it's forming these flat moving averages here. It's resting. Hopefully it's resting so it can move higher. How we're going to know is if we break these levels here. All right. So you can track that on your own. If we break those levels, that's good. Means you're going to head higher. Also, what can happen is that it can move higher, pause, move this higher, all right, and then come down while this is still flat, and then break out of that. That's going to increase the pace of that, and then that's going to turn up the 200-day moving average, and lo and behold, that's going to be a good move in the solar names. We'll keep you updated on that. Again, we have another solar ETF, PBD. Again, it's forming. This one is showing us indication of what might happen. Again, that's trending higher. We have a flat. I mean, it doesn't get better than this. This is a flat 50-day moving, 200-day moving average. Once we have a close above this level, telling us that this is going to go higher, they're going to cross over eventually, and that move is going to take this ETF to new highs here, or even to this level, if that happens. All right. So I am suspecting that the solars are not done. They still have some room to move in the next couple of weeks. If we get confirmation that they're going to break above this trend or this high closes here, let me get that off. And then now we have ASTIZ. Now, you know, I like this one. I've recommended it. It's been trading bad in the last couple of days. I haven't really lost hope in it, because what we are seeing here is an upward trending 200-day moving average. Hasn't broken it. We have a flat 50-day moving average. So what I'm hoping is going to happen is, if we close above, if we eventually get out of this sideways action here and move out of this range and close above 824, that's telling me that this 50-day moving average wants to move higher, and that's going to increase the acceleration of the 200-day moving average, and that's going to move the stock. I suspect if that happens, it's going to be a strong move, taking the stock initially to around 13, or more than likely to test these levels here on the 16, 17 level. So that's going to be a good gain. Probably talking about an 80, 90, 100% gain in a couple of weeks. So let's watch for that. And then again, one more last example is the sister stock for that. Now watch, in this example, this one never crossed over under the 200 moving average. So I've always thought between the two, I picked this one because the sister stock had a crossover. So I like this one because it never really showed that much weakness in the chart. The much it did was go flat above the 200 moving average. Now watch what happened when this was flat last year. Stayed flat for a while, and then when this was broken right there, bang, that took the stock from $3, give or take, and the stock would go on to trade initially at 8, and then at 13, and then at 17. So flat moving averages, and notice that there was a series of flat 200-day moving averages, flat, 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 and then acceleration. So flat moving averages always launch great moves, and buying above the highest close of the flat moving average, which I call the flat pivot, like in this case 834, 824 is my flat pivot, my flat buy point above the flat 50-day moving average. That's a strong buy signal. It tells you something long medium term is about to change. Okay, so now let's go back and look at the last one on this series of examples is ASTI, the sister stock or the main stock for this one. You see there was a crossover here, so that between the two, slightly weak cross undercutting of the 200-day moving average. But notice they're still flat. This is still flat, and if we get a close above, we are still moving sideways here. If we can move above that and close above that, initially we are going to have some bad action here because of this overhead supply of people who bought from higher prices trying to get out even. That is going to initially stall the breakout, but a close above this price at 1678 is going to be strong for the stock. That means it's going to move higher on the 50-day, and then that's going to accelerate the move of the 200-day. Notice again what happened when there was a flat 50-day moving average. Now you could have used either this close around here, the highest close here, or even the highest close around this flat right there. You could have used this flat high there as an entry point. Once that was broken, moved the stock from around $9, immediately moved it to around 18, and then settled down and eventually would trade as high as 28. Well, man, this is Eric Muathe, Muathe.com. I was just trying to clarify a few points on my Muathe Virgin breakout and the flat pivot entry point. Peace and blessings to you. I am out for now, but I'll be back with more in my Secrets series. It's an ongoing, continuous work because I love what I do, baby. Yeah!